Before we begin, a quick disclaimer. This podcast is for entertainment and information purposes only. It should not be relied upon as a base for any investment decision. Nothing here is a solicitation or an offer to buy or sell any security. Either the host, guests, or clients of either may own securities discussed on this podcast. And welcome to the Special Situations podcast. And today we have a very special guest. It's Liz Hall, who's a very famous person on FinTwitter and also an independent investor and a shrewd marketer, if I may say so. Welcome, Liz.
Thank you. I'm glad to be here.
Yeah, no, it's my pleasure to have you. Well, let me just start with a super basic question. How did you get into investing?
Well, I guess I started when I was about 16. I started investing, so I've been doing it for about 14 years now. So wow. Quite a long time.
So let's see, 14 years. So you've actually started before the Great Financial Crisis?
Yeah, that's right. I started in, I guess it must have been early 2007, because I was just about to turn 17, but I hadn't yet. So I actually started going right into the financial crisis. That was actually one of my formative investing experiences.
Yeah, cool.
It was a lot of fun.
Oh, you liked it a lot?
Oh, I don't know. I was like confused. Like, you know, you're a kid basically, and you just get started on this thing.
Mm-hmm.
And then, because I was at home all day anyway, like I didn't have anything better to do. They didn't have me going to school or anything. So like I didn't have anything better to do than watch CNBC. And so when the financial crisis hit and I saw like the stocks going down, you know, big numbers every single day, I was like, whoa, what's going on here? It was kind of intimidating at first, I guess. But at the end of the day, it ended up being all right. And I ended up with actually more money going out of it than I did coming in. So I managed to be very lucky, I suppose. Of course, it was only a little bit amount of money I was playing with at the time, just like birthday checks and stuff over the years.
No, that's great. And because I guess you managed to hold on, you weren't a seller. That's a key thing.
Yeah, I didn't sell out my portfolio. Actually, I rearranged it. At the time, I was more of a concentrated investor. Like these days, I have, I don't know, 30 stocks or something. But back then, you know, I would have 3 or 4 or 5, just because like there was such little capital at work. Like even the fees would be too much to have more than that. So I would go all in on one.
Yeah.
What's that?
No, I totally get what you mean. Like the fees can be a killer if you start out and you want to buy a diversified portfolio.
Yeah, absolutely. It's not like it is now where, you know, there are no more fees. Back then you had to pay your $12 a trade or whatever it was.
Yeah, exactly. Yeah.
Kind of terrible. But it worked out because I managed to find some interesting stocks that did really well. I was in, they think they called it Hanson Natural back then, which is of course Monster Energy today.
Oh, Monster. Okay.
Yeah.
Sweet.
And I held that for a little bit in the crisis. It got down into the 20s. I don't know if there have been any splits or whatever, but it was like 11 or 12 times earnings, something like that. And I was like, well, this is growing still pretty well. Like it seems really cheap. And I forget how much I held it for a gain for, but I held it for a while, and then I sold it to buy into General Growth Properties when it was at $2 in the bankruptcy.
Oh,
so
okay,
that ended up doing very well for me.
You ran a monster into like this. Those are two of the biggest monsters I can think of, like right after the financial crisis.
Like, yeah, I got lucky. And that wasn't my analysis. I was just like, whatever, you know, but then like sometimes that does happen, you know, you just observe things and you see what's going on in the world. And it's like, I knew Monster was pretty good. I liked it. I couldn't stand Red Bull at the time, but I would drink those Monsters. And I thought, well, this is kind of tolerable. And then what I did then with the GGP wasn't even any of my own analysis. It was all, of course, the Bill Ackman presentation, and that kind of got me excited. And I read a textbook on bankruptcy law, actually, because of it, which I've never used since. So, good use of resources there, but, it worked out at least for GGP.
Sure. Yeah, for sure. And for Bill Ackman and for you.
Yeah.
But so you already, at that time, you were you were finding interesting stocks. Like not everybody would have found that GGP one. And can you tell us something about how your style evolved and how you would describe it now? Or?
Yeah, well, I don't really have a style anymore. At the time, I considered myself kind of a value investor, like traditional old school value stuff. And that got me so far. Eventually, because of a place that I worked, I got exposed to growth investing and, started becoming more willing to pay up for what I considered were higher growth, higher quality, in some ways, stocks. And so, that's how I got into Amazon. I was like, because in 2009 or whatever, I never would have bought something like that. That's when I was doing this I think GGP stuff was around then. And when I got to, I was so heavy into the assets and like, what's it worth, book value and all that sort of stuff. If they sold them all. And of course, with GGP, the consideration of, I guess the optionality they had on the individual malls at the parent level, with asset level debt. But with Amazon, it was something totally different. It was just like, this company doesn't really make any money. It's trading at a very high multiple. But a friend of mine actually like, hey, you should actually take a closer look at this. And so what I did was I just like, what, I'll just buy it. And it sort of opened my eyes because obviously, when I bought it's like a 9-bagger or something now, just that one position. It wasn't a lot of money back then, but that having something like that happen to you forces you to reshape your view a little bit. You have to consider that maybe you don't have all the right ideas about the world. It was very humbling in a way, but it was also freeing because it helped introduce me to the idea that value could take lots of forms and that the variance of it could be in almost anything. And in some cases, it's better that it doesn't screen well because it makes it harder for other people to grasp sometimes. So if you have like value that's obscured by accounting or whatever the case may be, those can be some pretty attractive situations.
Yeah, sure. And so you're actually, you wouldn't qualify yourself as either value or growth, but you don't want to pay a very dear price for like out in the open growth, but you kind of like it if it's disguised or maybe others don't see it. And then
I'm not sure because I actually would say I don't have a process at all now. I just do what I feel is best. It's very intuitive. Like I just trust my feelings and my emotions. And I like to get involved like when I'm seeing something, especially if it's like a consumer cult stock. Like I want to get some subcultural immersion going on. I want to go on the subreddits. I want to read what people are saying, who are the users of these products, who are the fans of these products, and see like how deep is that sort of devotion. I think that can be very useful because passion is contagious and you can sort of alter the way that the world is if you have enough passion about something. So if you like something a lot and you share it with me, there's a chance I will also become interested in that thing. And, the market can grow in that way for the thing in question.
So if just so I can maybe learn a little bit from you here, are you then sort of identifying like a potential viral effect, or a potential for the company to like, yeah, grow exponentially just because there's this hardcore people that really love it?
Well, that's one way to frame it, I suppose. Like another way to think about is that these cults can sort of lower customer acquisition costs sometimes.
Mm-hmm.
So yeah, I guess that's one way to phrase it. I wouldn't frame it exactly that way, because to me, it's not like I'm trying to filter it through necessarily like, okay, so this is going to happen, this is going to happen. It's more that I want to bathe in the feeling, and I can sort of
Sure.
tell if it's a good feeling or a bad feeling. And if it's a good feeling and I get positive vibes from the company and its fan base, then I think that can be very useful to me as an investor. Because I think empathy is actually so underrated. I say, oh, you got to be so rational as an investor, and I guess to some extent that's true. But I actually feel like understanding other people and what drives them, especially if they're different than you,
Mm-hmm.
that can be even more powerful, because it helps you put yourself in somebody else's shoes and understand what they might like. Whereas if you're only looking at things that you might like, you're going to miss a whole lot of different opportunities in the world, because we're not all the same. We all have our own interests and tastes.
Sure, I've definitely missed a lot of those opportunities, and but it sounds very challenging to me to empathize like with a customer group or consumer group that's radically different. Um, yeah, it sounds pretty difficult. So, did you? Is it just? Do you think this is practice, or um,
Well, to me, like I go in like almost from the perspective of it just happens to me. Like I don't deliberately, how to put this? I don't deliberately search them out. What I do deliberately do is try to participate in culture. And if I participate in culture, I will find the things that are kind of cool and that are interesting. And sometimes investing opportunities come from that, versus the other way around. Like I want to find an investing opportunity, so I'm going to go into these different subcultures and figure them out. It starts with the culture and flows down to investing. And so if you just like spend a lot of time, because I'm like very online actually, like I'm
Mm-hmm.
on Twitter all day long, pretty much most days when I'm not feeling ill. So it's not hard for me to find these things, because my friends are like, they're a variety of people there, and my Twitter is like a bunch of different takes on it. And so like I can see what people are posting, and if that seems kind of cool, I can get into it. It's all about like finding communities of people who for me, who also signal boost things that they find interesting. So that's actually probably the highest value for Twitter for me, actually, is just finding things that other people find interesting and then deciding maybe I want to dive into that too.
All right, so that's sort of your search process. That's cool, and maybe this ties into you have an investment in let me. It's the Warhammer company. I thought it
Games
was
Workshop.
pretty cool. Yeah, Games Workshop, and
Yeah.
that's has been a real killer over the years. Like a,
Well, I just recently
oh,
bought
like,
in.
yeah, I noticed, but it's I think you had some great timing there.
Yeah,
Um,
I did.
but is this like an exponent of your cultural immersion or
Oh,
strategy?
I think so. Absolutely. Because you go online and you can read about their communities, and, watch the YouTube videos about it, and you can see how obsessed certain people get with the
Mm-hmm.
game. They spend hundreds or thousands of dollars on these toys.
Oh
And
yeah, thousands of dollars. Yeah, for sure.
yeah,
Yeah,
yeah, it's amazing. And I love that, because
yeah,
you see their passion. I think one of the things that's really cool
yeah.
actually
Mm-hmm.
about Games Workshop is the paints, because you can paint your guys, and
Yeah.
that it goes from just being a toy that you got out of a box to actually
Mm-hmm.
you infusing part of your soul into it and in your own
Right.
artistic endeavor. And so it's like you're creating your own Horcrux in a sense. And I feel like that attaches your identity a little bit to your
Wow.
characters. I think that that is actually so shrewd what they did with that.
Yeah.
Actually, it's kind of devious in a way. I love it. And so when
Yeah.
I saw that, I decided I had to buy at least a little bit of Games Workshop stock.
I'm not sure that's like they did that on purpose, but I'm like blown away that you recognize that, because I didn't recognize it at all, and it reminds me of a story I've heard about Apple, that they, the back of the iPhone is sort of shiny when it initially was launched, and it was so people would like brush it up, and they would like get connected more with the thing. It really reminds me of that. Yeah.
Yeah, I mean, I don't know if it was intentional or not, but I think that's the
Hmm.
effect that's happened.
Yeah.
And it really attracted me to it because obviously identity is so important to everybody. Like we all have our own identities, and in a way, there's nothing more important to us than our identities. You see how people get so engulfed in politics or religion or anything that is identified closely with them, their own families, for instance. And so if you can get your customer to infuse a part of their identity into your product, it becomes so much more than just another product. It becomes a part of them. And I think that's beautiful, actually.
Yeah, I think it's definitely a kind of product that people really, that becomes part of their identity, or it's it's not like a risk game you get out of the cabinet.
Yeah, for sure.
Yeah, so that's interesting. And what do you think about like they've got a lot of royalties, I think, on like book series and movies, and those are also really it's a really subculture. Like those are not like blockbuster things, but I think they
Right.
kind of have like a loyal uh, base who just buys these things because they really love it.
Yeah. No, I think that's true. It's kind of interesting. Like one of the things that they're talking about doing now is like they've got somebody working, trying to get Warhammer and turn into a TV show, and I don't know if that'll happen or not. I may live in Hollywood, but I certainly can't predict its machinations. But I do know that historically, that has been a big way to drive, incremental sales to a product or brand just by increasing its exposure. There have been
Yeah,
several. Go ahead.
yeah, or seeding like lifetime customers, because I have
Yeah.
friends who play this game, and they buy like a set when they're teenagers, but they still have this, it's still, and they, maybe they can't play it every weekend, but sometimes they get together with friends who play that, and they still buy like editions and new books and new stuff that comes out. It's like
Oh, sure.
once
It's the
the
same sort of thing. I wish it was split off, but like the Wizards of the Coast division of Hasbro, like dang, what a business, right? And I think it's in a way kind of similar. It's like my brother is a big Dungeons and Dragons nerd, and it's the same sort of. I say that lovingly, but it's the
sure.
same sort of thing, you know.
Yeah, yeah, absolutely. Yeah, I think it's that may be even more profitable. I mean, they're only selling IP, like it's always books, and the Warhammer, they're actually pretty quality figures.
Yeah,
But I'm not sure. We can't really look into the uh, VOTC, right?
yeah.
Um,
Unfortunately, maybe one day.
so
I've been tempted to buy a little bit of Hasbro. I think like some of those like traditional their board games. I don't care so much about that, but I do think that division in particular is a cult business, and if it was public, I think it would warrant a very high multiple.
yeah, for sure. Yeah, yeah. I think the Magic the Gathering is also really amazing.
I've been trying that actually. Yeah, it's fun.
Oh right.
I never because this is like the subcultural immersion thing again. like I've been trying it. I couldn't do it in public because obviously of the corona, but
Right, sure.
they have this new one, Magic Arena, where
Mm-hmm.
you can play online. And I mean, I'm terrible at it. I almost never win. But like, you buy these card packs online, digital card packs. Like, imagine the margins on that. Oh my gosh! So
Yeah.
I've spent like $100 getting cards online with this Magic Arena, and I just think when I put the credit card in, like, how much money is going straight to the bottom line for them. And so if that can really take off, I think that's kind of cool too.
Yeah, yeah. I think they launched that product in response to one by Blizzard. They launched,
Hearthstone.
yeah, Hearthstone. Yeah,
Yeah.
to defend a little bit against Hearthstone because I think Hearthstone was eating their lunch because there's another like Magic online product, which I think is a bit more. It has, I think, more complexity to it. But yeah, that's kind of a niche product, and Hearthstone was, everybody
Right.
was getting
If
into
you go
that.
on Twitch, like a lot of people are, streaming their Hearthstone games and stuff. And I thought that's
Yeah.
kind of interesting. I know my cousin was into it for a while.
Mm-hmm.
So I think there's definitely room for these sort of things in the world.
Yeah, and you've always been a gamer yourself, I
I
think.
used to play. Sorry, go ahead.
No, but I get the sense that you play a little bit of Magic, but not really Warhammer or Dungeons or Dragons, but your brother does. But you were more into video games, or what kind of games do you really like?
Yeah, no, that's true. I was big into video games when I was a kid because I didn't have anything else to do, really. You think
Mm-hmm.
about it, like I was, obviously I was kept at home from fourth grade on, and I didn't really have any friends. So I had my 64 and my Super Nintendo and my PlayStation, and so I was immersed in those worlds all the time, and online on the RuneScape. So I played a lot of games probably till I was about, I don't know, 20 or 21. Then
Yeah.
I sort of lost interest. I still will play some games,
Mm-hmm.
but usually it has to be multiplayer. It's more of like a social experience with somebody rather than me playing the game to play the game, unless it's like a strategy game. Like if you hook me up with Wall Street Raider or Crusader Kings, like I can do that, but I don't play like first person shooters or anything like any of the big budget games anymore.
Right. So no. Oh no. It just latest Fortnite, right? You're not into Fortnite, but
I've
you're
never played it.
okay.
I probably should try it, but my computer, like, I don't buy like high end computers or anything,
Sure.
and I don't have any game consoles
Yeah.
like my that are recent.
Mm-hmm.
I'm more into the retro stuff. And so I've just never really had a means to play it. But I know people who
Cool.
are, and they say it's good, but it doesn't seem like it would be something that would appeal to me, but you never know. It might.
Yeah, sure. Yeah, for me, the danger is often that I'll get sucked into it, and then I want to get really good, and it's just, and then a month later, I'm thinking like, oh, now I'm pretty good at this game, but why? I don't
A
really
month later,
want to do
yeah.
this.
My
So
friend used to joke, yeah, like a month later, I'm good at the game, but I lost my job.
that sounds really familiar. Yeah, so like maybe I have to go back a little bit here because you just said that you were homeschooled, and I didn't really get into your background at the beginning, but it's kind of unusual because you were homeschooled from a fairly young age, right?
I wasn't really homeschooled. They just let me do whatever I wanted to do. So like for like, yeah, I don't know, like 3 or 6 months, I think I may have finished out the fourth grade on homeschool, but
Mm-hmm.
then we moved and we never got set up with the new school district. and
Yeah.
they never forced me to do any like work or anything. So pretty much I just watch I watched TV, and then I played video games all day, and I didn't do any schoolwork though from that time on.
Yeah. And so what age did you like start playing video games at home?
Well, I started years before that.
Oh.
I was
No, but
like
I mean like
4, I think, when I
that
was,
you were taken out of school and
oh, that I was taken out of school.
yeah.
Yeah, I was taken out of school at age 9.
All right. So this
Yeah.
is yeah, it's such a so amazing that you yeah, became like such a great investor, and you have interesting thoughts. So, well, I think that's like a tough deal, at 9. That, or did you not experience that as a setback or as a
Well, when you're 9, you love it because now like all of your time is spent doing what you want to do. And I was such an
sure?
obstinate child anyway. Like
Mm-hmm.
I hated going to school. I hated it, and I would fight every day not to
Yeah.
go to school. And there was some stuff behind that, like behaviorally, like that probably is not appropriate to get into. But it was when I did finally win, I guess, and get to
Mm-hmm.
not go to school anymore. Oh, I had a blast. I had so
Okay.
much fun because now it's like, kid in a candy store, except like kid just immersed in digital games all day
Sure.
long with nothing to do, nobody forcing me to do anything. It
Yeah.
didn't become a problem actually until later on,
Mm-hmm.
when I was probably in my mid-teens. I would get depressed because I didn't have anybody to socialize with except online. So I was like, even back then I was very online. And
Sure. Sure.
I had a lot of friends online, but I didn't have any, and I wanted some in real life.
Mm-hmm.
And I didn't get that until I was 21, and I got a job, and I was able to make friends at my job. But if you think like that's actually probably the real challenge, is that basically I lost 12 years of socialization that I've had to make up. And that's probably been the biggest challenge of it, actually.
Okay. Yeah, doesn't that makes a ton of sense, actually. Yeah, especially if you um I think that would be pretty challenging. But and then at your first job, where did you end up working, or what? Where did
Yeah,
you?
I was in the analyst development program at the Motley Fool newsletter company,
Cool.
and I worked there. I guess it
So
was about 4 years. And
and you
I met my best friend there. We're still best friends, and we talk like every day. So,
okay?
it's really cool. Like you make a friend, and then like you just stay in contact forever. Like even if you don't live nearby, like I love that. And so it's like kind of why I like to meet people now. And I just travel all over the country when I can, to hang out with people from FinTwit, because
Yeah.
I found I can make lifelong friends if I just get myself out there. And it's sort of a way to help me overcome that social deficit. Like ever since this thread happened, and even before, like the month before I did the thread, like I was in Texas, and I
Mm-hmm.
met like 4 or 5 FinTwitters there. And then the week later, I went to Canada. I went to Toronto, and I went to Ottawa and met some FinTwitters there. And then after the thread, I went to New York, and I went to San Francisco twice. So like a bunch of people here in LA. And I would just go anywhere, anytime anybody asked me, hey, do you want to meet up? I would just say yes, because like I don't have a job really. And so I can just kind of do what I want to do. And I love meeting people. And so I was like, yeah, sure, I'll be on a plane. I'll be there next week, and it's always been fun. It's always been fun. And I just love it.
Okay. Cool. Yeah, that's so. Yeah, but it's amazing, amazing backstory. I'll try to get a little bit back to the some of your investment ideas, because otherwise we'll run out of time and we haven't talked about any of those. Um, let's see, maybe something that I found pretty interesting. this is a sort of a special situation podcast, or at least I'm trying to to bias it that way. And I noticed you actually use quite a few special situation techniques, and you do um, I think you used it on target, but now I'm a little bit. Oh yeah, it's like an inflection where you see an inflection happening. Can you talk a little bit about how you approached that and how you did that at target?
With Target, yeah. So basically, I was just looking at stocks and I was like, Target seems kind of cheap, because
Mm-hmm.
when I was looking at it, it was like $70. It was like 11 or 12 times earnings, and the market was at like 18 or 19 or 20 or whatever the heck. Like, I don't even know. But like, I was looking at Target, and it was like, well, physical retail is dying, and I was like, well, yeah, that's kind of true. But when I looked at Target, they were actually comping very well in their sales, and so much of that was the online. They had really figured out the online, strong double-digit online growth. And so I thought, like, well, they seem to actually are having success online now. And so, like, couldn't the narrative change on this, just like it did with Walmart? And you saw, like, obviously Walmart went up quite a bit, and like, here's Target trading like not even a 13 multiple on this stock. And I was like, well, sure, it could. And if it doesn't, I'm not paying that much for it anyway. It's got a decent dividend. Like, it'll be fine. Either it'll work or it won't. And so I was like, sure, I'll buy some. And when I bought it, it didn't take that long to work out, because like, I don't know if it was a quarter or two later, once again, strong online numbers with their online sales growth. And and the stock just popped. It popped bad. Like, it just went from like 70 to, I don't know what it's at today, 100 something or close to it, I think. But that's it was a good return, and it didn't take that long to happen. It was just because I spotted the inflection, like, in their online sales, and I figured that over time people would probably come to appreciate that. And if it got closer up to Walmart's multiple, that could be a pretty good return. And sure enough, it was.
All right. So yeah, this is sort of like the two segments. In this case, an online segment. Then you think the smaller segment was underappreciated, and you saw a lot of potential. Actually worked out, different multiple. Awesome, but you still hold it, right?
Yeah, I hold it. I don't sell them too often. I tend to hold them for a long time.
Right.
Like, as long as it keeps working, like, yeah, I'm happy to hold on to it. If I find something else that I think is better and I don't have any cash, I mean, sure, maybe, but that's not a problem I have right now. So I hate paying taxes. Because I'm not really it's not really a libertarian philosophy. I just hate paying taxes. Like, it's a capital efficiency thing for me. And so if I think that the stock can do well, then I will just hold on to it, because then I don't have to make up for the tax drag when I invest in a new one. So I've still got my target. Yeah.
Sure. So it needs to be pretty overvalued before you would exit voluntarily, or you have a
Yeah, and
really great all-around.
if the company's good at capitalizing on its overvaluation, I would probably prefer it to be overvalued, because then it's
Mm-hmm.
actually not overvalued. You know what I mean?
Oh well, no, wait a minute. Let's rewind a little bit. You prefer it if it's overvalued?
If they know what they're doing, yeah, because then the company can utilize the capital markets and its
Mm-hmm.
overvaluation to create more value for the existing shareholders. So actually, is it so overvalued after all? It's just like a reflexivity thing.
You mean like
So
doing some like acquisitions with stock, or
yeah, yeah, like
issue some shares?
right, yeah, exactly. Old Henry Singleton playbook.
All right. And have you think like target management is a singleton quality or?
No, I'm just saying.
Okay. You just hope to get there, or
Well, if a company gets, I'm just saying that if a company gets overvalued, it might actually make me more excited to own it,
yeah,
because I think like that unlocks some capital allocation abilities that the cheaper stocks don't necessarily have,
yeah,
and I
sure.
think that is not always appreciated.
Yeah, no, I think this also really plays in something else that I wanted to talk to you about, which is that you have, I think you called Elon Musk like the best CEO of all time, or something like to that effect.
I probably
Uh,
did, yeah.
um, Greatest CEO of all time, and because he can like create a narrative and couple that with capital allocation, and that really changes the outcome for the company. I thought that was a very interesting thought, especially because I'm on the wrong side of experiencing that effect.
Have you been shorting him?
I have at various times, and I have some puts and some put spreads.
Okay.
Um, and it didn't work out at all. Just, but I don't think anybody's surprised. Um, but I thought that was a very interesting thought, because it's true. That's actually what's happening. I think he even allocates capital to drive the narrative. It's I don't think he necessarily does it super well, but he even serves like his narrative. I think it almost supersedes everything. But what are your thoughts? Because this is really your realm, or your.
I think it's smart to invest capital to shift narrative. So
All right.
yeah, I hope that is the case for Tesla shareholders.
Oh, I
I
think it.
mean,
Yeah.
I don't own it, but
Mm-hmm.
I stand in fascination and awe of what he's been able to do. And look,
Yeah.
like you think about like memetics and like just Tesla and Tesla Q, the online Tesla fan and haters clubs
Mm-hmm.
on FinTwit. Like you
Yeah.
read this stuff and you see who has a cooler memetic understanding. And like, is it Elon Musk, the guy who like sends rockets and like just did, oh my gosh, that publicity from the launch of the space station. Like this
Yeah.
guy clearly is a genius, is the narrative. I don't know if it's
Oh.
true. I don't know, but I
Mm-hmm.
do know that sending a rocket to outer space says a lot more than publishing a 300-page legal brief about how Tesla's playing games with its suppliers. Like if you understand memetics, this is not hard. Attention is scarce,
Yeah.
and so
Just.
the one will dominate the other in the public narrative, even if
Yeah.
the other is also true.
Okay. Just from my understanding, English is not my native language. I don't know what memetics means. But
Okay, I'm just means like, you know, like memes, like people will
right.
post memes. It can be anything really, like like are they gifs or gifs, however you call them,
Mm-hmm.
on Twitter. Like sometimes people like retweet them, like they take on a life of their own. So what I mean is that to shift a narrative, you want to have something that is readily shareable
Mm-hmm.
and has positive associations with it, like to win. And
Sure. Yeah.
what I think that Elon Musk has been able to do with like these rocket launches, like there are a few minute clips that you can find, like the Tesla in outer space with the spaceman in it. Like that
Yeah.
became a meme, and it highlights his genius or his supposed genius in a way that floods out like 300 pages of legal briefs about Tesla playing games with its suppliers, because
Sure.
number one, nobody trusts lawyers, and number two, nobody in the United States pretty much is going to read 300 pages of legal briefs unless you're already heavily invested in this. And so which one gets spread more? Which one influences the narrative more? And that's
Yeah.
why I think Tesla Q is actually pretty terrible. And it's not because they're wrong. They may well
Mm-hmm.
be right. I don't know. But I do know is that they're not playing the meme game correctly.
Sure, like very ineffective at influencing the discourse around the stock.
Yeah, exactly.
I think that's fair, and yeah, certainly guilty of that. And I just for the audience, it's not. I don't think Tesla's like the worst stock in the that you can own. There are a lot of bad stocks. Just one of them. So, but thank you. It was, yeah, super interesting.
Sure.
Um, and then yeah, it's also another special situation thing you do is the capital structure arbitrage, which is sort of traditional. And I think you did really well with Marriott. So,
Yeah, I don't know if I did or not anymore. I was for a while. It was
right.
up, what, 120, 130, 140. I more than doubled my money on Marriott. And
Mm-hmm.
then Corona happened and it went back down. I lost years of gains, but I think it's back up again now. So like, I guess I did. I'm not
Should be
sure.
right. And but ID there is just it was, I guess, heavily indebted,
I'm
or
sorry.
it was a heavily indebted company,
Oh,
I
yes.
guess. Yeah.
Yeah.
And
So it's a sort of arbitrage play. Like
mm-hmm.
they consistently, like it's part of their game plan actually, that each incremental dollar of profits, they can basically lever up and borrow more money on top of it. And then they just plow it all into repurchasing shares. And so over time, the equity base shrinks and it gets replaced by lower cost debt. And obviously that can do well for the equity over time as long as the company can keep growing.
Okay, so your play was actually they were levering up. They were
It's like, yeah, like a public recap, sort of.
like, yeah, using cheap debt to buy back shares, and that
Yeah.
you said coming, and that worked out. Okay, yeah, because sometimes I do the opposite. Like when something has way too much debt, and it gets punished for it. But I see kind of a way through. That can work as well.
Sure.
But just so I was curious which one it was, because it wasn't too familiar with Marriott. Thanks.
Yeah, it's the piling on debt in this case. You know, it's all,
Yeah.
of course, it's all dependent on business fundamentals. It acts like sort of a force multiplier of whatever's going to go on with the business, right? Like, so if things go really well, they're going to go really, really well. And if things go
Yeah.
terribly, like, see you in bankruptcy court, you know?
Yeah. And you just ferret this out through the financials, or you're on the earnings, reading the earnings calls to see what's
Oh, they made
managed.
it clear. Yeah, they made it clear in
Right.
like their
Okay.
presentation
Yeah.
back when I bought it what the game plan was. That they were going to lever up each incremental dollar of earnings and return it to shareholders. And
Yeah.
I don't remember when this was exactly. It was at least like 4 or 5 years ago that I
Sure.
first got involved. But yeah, it was. If you go back, I don't know if they still. That's one of the things that actually annoys me about these IR pages. Sometimes they don't have all the presentation, like they don't keep a file of all the presentations. They only show some of the more recent ones. So I don't know if you'll be able to find it, but if you can,
Mm-hmm.
it would have been like 4 or 5 years ago.
Sure. Okay.
Because I don't keep up. That's the thing. Like once I figure out what's going on, and if there doesn't seem to be any real trend, I actually don't even really keep up with my companies that much. I just let them do what they want to do. I feel
Yeah.
like focusing on the numbers too much quarter to quarter can kind of fog your mind up. So like I'll check in like once a year, maybe see like, okay, are they still executing like I thought they would? And if not, is the difference enough to have to reassess? And
Yeah.
usually it's not. So I just
And
spend my time in other ways.
um, right. Yeah. I want to ask you what are some of the things that then turn you really off if you check back into the company, but I'll tie that into something I wanted to talk about.
Okay.
I think that'll be the last thing, so I don't keep you too long. And as when I went through your portfolio, you posted on Twitter, and
Yeah.
it's super interesting. And I think you're very. I think there's a theme to your portfolio. It's super eclectic on how you generate upside, I think. But when I looked, I didn't know all the names, but when I was digging into them a little bit, I noticed they're almost all like unkillable businesses. Like they won't be dead in 5 years. I don't think maybe there's like one or two that's that's a little bit risky, but they, you, I think you are really good at covering your downside. I really like that. And yeah, it's just something I noticed. But do you think that's true, or is it
Um,
coincidence?
it might be true subconsciously, but it's not something I deliberately seek out. I
But
just sort of deliberate what I seek out is like what the world shows me. And so
yeah,
if the world is showing me like really cool businesses that aren't going to be dead in 5 years, like I guess those
sure.
might be the ones I'm attracted to on a subconscious level, but it's not something I deliberately do, if that makes sense.
No, that makes total sense. Just you're looking at what's coming to you. That's yeah. I could also describe it a little bit different. Sometimes it's almost a little bit of a cynical portfolio. Um, like you have a lot of defense companies, a lot of like discount retail or like essential retail, like not
Yeah.
yeah, and like also REITs that tie into like essential retail. It's not REITs that will easily have leases canceled. And now I have to think a little bit what else. And then some like really good balance sheets, like Alphabet, that sort of uh, company. Yeah, and you don't know what the upside will be over the next 10 years, but it's not going to die. It's impossible. It's like monopoly, like yeah, and like
Yeah. Okay.
like Amazon, the same thing. Um, you know, it's going to fluctuate the stocks, but it's not going away. It's so hard to imagine that happening. Yeah,
I think that's true. Yeah.
yeah.
The defense stocks are actually those ones I all bought very recently. I didn't even really put that much effort into them. I was
Mm-hmm.
like, well, I just want to buy a basket of these. But the one that's kind of interesting are those REITs that you mentioned.
Mm-hmm.
Like I bought those back in, I want to say it was March. It was during the crash, and I thought, like all these REITs are just getting hammered. But you know what I bet's going to be pretty good is grocery and pharmacy anchored shopping centers. Cause like I know that the grocery stores are doing really well, and they're not. And obviously the pharmacies, you got to give those pills out. Got to push
Sure.
your pills, and so I thought that a good chunk of their rent base was going to be stable. And so even if the other tenants died, these businesses in these shopping centers were going to be able. They're going to have the cash flow to survive to the other side of this thing till they can lease up their centers again. And so I thought, like, what are the some good ones? And I thought, well, I love the West Coast. Obviously, that's where I'm from. So I bought ROIC, and I bought the other one I bought was in areas around New York was Erstat Biddle Properties, not in the city proper, but they both had big grocery and pharmacy components to their rent roll. And I was like, yeah, I think these are going to do well, and I think they've been knocked down way too far. So yeah, you're exactly right.
So that was a bit of a post-COVID play, like pick it up cheap and it will survive for sure.
Well, I thought so. Yeah, I
But
mean, as long as you get, I think I looked at them. They're getting UPV. I think it's getting still sixty
yeah,
percent of its rent, which is obviously, I mean, it's not 100%, but as long as their anchor tenants keep paying, I think they'll probably be okay.
sure. Yeah, yeah. I didn't know when you picked things up. Sometimes you could guess maybe it was something related to a current crisis, but you can be sure. And
Yeah,
then with
I
the
think ROIC was about $7, and
mhm,
UBP, I don't remember, but I'm up about
yeah,
50. I'm up, I think, 50% on UBP, and I'm up a little bit more than that on the ROIC.
cool.
Yeah.
Maybe And I think the defense companies, you have a specific idea behind that, or you bought a basket of them, so you don't really
Yeah.
care for
I
one
don't have a
specific name?
view on one in particular.
Mm-hmm.
It's more that I think that in the long run, the United States can't really decrease its defense budget and should probably actually increase it, because the military is what gives us the ability to issue so much debt, because it's the strong arm that can force other countries to deal with us. Otherwise we can invade you. And so, or at least have the threat of doing it. Obviously, preferably there will be no wars. I hate war. But I do think that having that deterrent is very important. And I thought, you know what? I don't have any exposure to this. And I feel like I don't know enough really to just like find a ton of alpha in these. I don't understand the military industrial complex well enough. So I'm just going to buy a basket of them, or, 3 or 4 anyway. And that way I don't have to pay any ETF fees or anything. So I don't know if they'll work out. They're kind of a new way to try investing for me. Like, can I spot a theme that I think is going to work well for an industry rather than specific companies? I don't know. Maybe it will, maybe it won't. But it's kind of I thought it was kind of useful anyway to diversify my portfolio a bit.
Sure. So this, like, yeah, you like experimenting with new styles, try new approaches, and this is one of those.
Yeah, absolutely.
Yeah. It's almost like a macro investment. Yeah, super interesting. Yeah, I think I'll wrap it up and leave you be, because I've taken up an hour of your time, and I'm so grateful that you were willing to come on for the show.
Thank you for having me. It was a lot of fun.
No, thank you, and really loved having you. Where can people find you or read more of you? You have like a famous investment thread on Twitter, which is almost like a blog. It's like 100 posts.
Yeah, so that's where you can find me pretty much, is if you want to find me, if you want to get in contact with me, you probably should do it through Twitter, because
Cool.
I'm always on there, always on there. And my @ is like @LA Forever Hull, all one word. And so that's the best place, because I don't really check my emails or anything.
Okay. Well, thank you so much for coming on, and it was super great. Thank you very much.
Thank you.